On Sunday, the rumors are coming out of the United States that the Joe Biden administration will cancel the presidential permit for the Keystone XL pipeline. And this looks like, it's a deliberate leak, a deliberate balloon floated by the incoming administration, which inauguration is Wednesday. And this has all sorts of implications for the Canadian industry and the Alberta government. So we're going to talk to Richard Masson, who's an economist with the School of Public Policy at the University of Calgary, about the likelihood of the cancellation and what the implications are. So welcome to the interview, Richard.
Great to be here, Markham.
So let's keep this simple. What's your take on this?
Well, it's looking very concerning for Alberta and for Canada if Biden cancels Keystone XL. That's a critical piece of infrastructure that was designed to move our oil as efficiently as possible to the big complex refineries on the US Gulf Coast that really want to process it. So it would be a blow to the country and hurt us financially through jobs and investment, and probably really a blow to our confidence.
Now, my take on this is that the losers are Canadians. So we'd have the oil sands producers, we'll have the governments who will have lower taxes and revenue, we'd have lower employment. The losers are not in the US. The US Gulf Coast refiners will still get that Canadian heavy crude from Alberta. Let's do it by rail probably instead of a pipeline. But they'll still pay the same price. And certainly the Biden administration will not have to take the political hit on this by canceling it. So what's your take on that?
I think that's generally correct. There would have been thousands of jobs, potentially 10,000 jobs this summer and next year, construction of the pipeline. It's a big project, $6 billion US of construction. But generally what you're saying is correct. Those refiners have access to heavy oil on tankers from anywhere in the world. And so that's the price they're going to pay. And if it costs more for Canadians to get our oil to them by having to use rail, which costs, say, $20 a barrel instead of pipeline, which might be $10, $11, $12 a barrel, that's just a loss to producers and governments.
And we should point out that the decline in Venezuela since 2016 and the long-term decline in Mexican Mayan has really tightened up the global heavy crude supply. So there is, in the short to medium term, the prospects for the Alberta heavy crude is actually pretty good. And the oil sands producers have really done a good job of driving down their production costs. They're now a break even of between, say, $30, $35 West Texas Intermediate. So, there's a demand and there's a competitive supply that would have gone, oil that would have been transported by Keystone XL.
Absolutely. And, it's been tough to see any investment decisions in the last couple of years because there was so much uncertainty. First there was very wide differentials of $40 a barrel, then there was curtailment, then COVID. So it's been very tough. But we were just starting to turn the corner with CAP last week suggesting investment was going to increase modestly. And I would have said if oil prices stayed in this $50 range, we would have probably seen companies starting to increase their budgets over the course of this year. But people are not going to invest in new production if they're not sure they're going to get it to market. So, not having Keystone XL in the medium term is really going to hurt the outlook. We have Line 3 coming on. We have TMX under construction. Those things are positive, but Keystone XL gets us to the critical market in the US Gulf Coast, and that'll be a blow.
You make the point that the smaller margins actually is a drag on all of the oil, whether it's sent to the U.S. Gulf Coast or not.
Right. So we produce, 3 million barrels a day from the oil sands. A little bit more than that now. We're almost back to pre-pandemic levels. But let's say if we had 400,000 barrels a day moving by rail, which is the peak we had right before COVID. When we start to move that much by rail, we move to what's called rail parity instead of pipeline parity. So pipeline parity would say the differential between WCS and WTI is probably $10 to $12 US a barrel. Rail parity moves it out to $18 to $20 a barrel. And that tends to apply to all the barrels we produce. The dilbit barrels we sell at that discount, And the integrated barrels that go through an upgrader, we have something called the bitumen valuation methodology, where they pay a reference price because they don't have an actual sale between their production and their upgrader. So effectively, all the royalties and taxes are collected on lower bitumen prices, which can have a big impact for Alberta in particular, but for Canada in general.
So we'll be losing construction jobs, we'll be losing tax revenue. And then on top of that, the cherry on the sundae is the $1.5 billion of equity that the Alberta government has put into this project, as well as the $6 billion loan facility that it committed to it. And at least the 1.5 billion appears to be lost.
It's highly likely. I mean, the whole point of that was to get construction happening in 2020 and get as much pipe in the ground and get across the border, which I believe they did, and try and say, facts on the ground may be persuasive in helping the pipeline get completed. But if Biden cancels the permit, that probably is all for naught. You may be able to do a lawsuit. I don't know if that's going to be successful. It doesn't really help you because you wanted the pipeline. The $6 billion loan guarantee probably won't be exercised if they can't do construction this year, so that's a little bit less risk that way. But it just shows how important these pipelines are. When Alberta had to back Keystone XL and the federal government had to take over Trans Mountain expansion, right? So which company is going to step up to try and develop another company based on the track record of the last two big ones could only get done with the government taking over? It's just mind-boggling that we're in this situation.
Richard, thank you very much for this. Really appreciate it.
Anytime, Markham. Take care.